Have you ever looked at cheap rental properties or real estate in the Midwest or out of state? Have you ever thought to yourself, man, I'd really like to buy some rental properties somewhere else other than where I currently live? Have you ever been stumped because you thought to yourself, wait a minute, hold on, I have no idea what goes into buying real estate somewhere else. I don't even know what I'm doing, so I guess I'm just gonna forget about it. Now look, if you're looking for the answer to those questions and more, then you're in the right place. Because in this video, I'm gonna be covering exactly how I've purchased 11 rental units in the last 3 years without ever seeing them in person, without ever flying out to the area, without ever having any residency established there or knowing any of the locals. You absolutely 100% can invest at a distance completely virtually, and while it has its own set of unique challenges and obstacles, they're not that difficult to overcome and work around. My name is Mike and I've been investing in real estate since 2018. I currently have 13 rental units, that's 1 triplex, 2 duplexes, and 6 single family homes. I live in Seattle and I house hack this duplex. I own 1 single family house in Chicago and the rest of my properties, they're in Indiana. Gary, Indiana. And look, before you judge too harshly and say, oh my God, Gary, Indiana, dude, I've heard that's the worst place in the country. I get it. Yes, I'm capable of Googling it. I'm seeing all the negativity about it online. This video is not trying to convince you to invest in Gary or invest anywhere. This video is to explain the step-by-step process of buying a rental property or any real estate at a distance. Now I'm going to cover the basics that apply to buying any real estate anywhere, including in your own city, a little bit quicker because there's a lot of overlap between buying locally versus buying at a distance. But if you want a video that goes into deeper detail about these basics, I have covered those topics too, and you can find that video here. Alright, first, for most people, you're going to need a job. Banks and lenders love W-2 income. You're going to need 2 years of work history or a bachelor's degree and a job in your field. Second, you need to have somewhat decent credit. Now, the better your credit, the better the loan will be that you use to purchase the real estate. So, pay down your credit cards, try to get rid of that car payment. Ideally, you'll have a score that's 760 or higher to get the best loan terms, but you still can get approved with a score as low as 620, typically. Third, you need to save up your down payment. Ain't nobody gonna be able to work all that overtime but you. If you're buying a rental property, remember, you're gonna need 20% of the total purchase price for the down payment, and then another 1 to 2% for closing costs. So on a $100,000 property, that's around $22,000. Fourth, you have to get pre-approved by a lender. Now, unless you're planning on paying all cash, which most of us aren't, and if you are, I'm jealous. You need to contact the lender who's going to run your credit, verify your work history, ask if you have sufficient funds to make the down payment and closing costs, and then they're going to issue you a pre-qualification letter that you can use on your offers. Fifth, you need to be educated enough about your market that you can recognize value and find a good deal. Now, I recommend people look at their desired market and at their desired asset type 5 days a week, every week, for at least 3 months. Now, this will allow you to follow pricing and inventory trends, and that makes you a very dangerous buyer. Now, for example, I follow small multifamily 2 to 4 unit buildings in Gary, Indiana, and I look at that inventory and prices on my market every day for the last 2.5 years. Now, those were the basics that apply no matter where you invest in real estate. Now that you've accomplished them, studied your market, you've got the money for the down payment, you've got the pre-qualification letter in hand, let's get to the specific out-of-state purchasing process. Now, if you've been looking at the market 5 days a week, like I told you, you should have started to hone in on the type of asset and price that you're angling for. You should easily be able to tell when something seems underpriced or overpriced if you're looking frequently enough. Now, let's imagine that you just discovered the deal of the decade. You're pumped, you're ready to go, you want to make an offer and buy the thing. Now, here's what I recommend. Most markets are still very competitive, so I try to meter my expectations, and you should too. Now, I know it's difficult, but trust me, keeping your emotions in check is critical, or you risk overpaying or getting out negotiated. Now, personally, I use Realtor.com. As soon as I see a listing that I like, I scroll down to the listing agent. That's the seller's agent. I give him a phone call. I want to talk to the seller's agent directly. I do this for multiple reasons. First, I don't like playing the game of telephone. And me speaking to my agent, who then speaks to the listing agent, who then speaks to the seller, who then has to speak back to the listing agent, back to my agent, just to talk to me. It's freaking annoying. It's time consuming and it's inaccurate. So I cut out one of those people by going straight to the listing agent. Now, second, I heavily imply or I outright ask, would you be willing to represent me in this transaction? Now, if your owner doesn't have a problem with that. Now, I've never had a seller's agent say no to that question. They're too busy seeing dollar signs because now they're getting double paid for the same transaction. This makes all of your offers that much more attractive. Even if your offer is a lower price or there's more contingencies attached to it, the listing agent is going to be rooting for you because they're rooting for themselves. Now, people may tell you that the seller's agent has a fiduciary responsibility to their client, and they do. But basic human psychology takes over and gets a vote. People will act in their own self-interest, so take advantage of that. Now, the other added benefit is that this forces you to talk to 3 to 5 new agents a week, or sometimes even a day. Now, this builds out your network and will allow more people to know what you're looking for. Then, as these agents get listings, they're going to call you if you're still top of mind. This also helps you start to realize who the good agents are and who the deadbeat bums are that are lazy and not interested in helping you. Now, none of this means that you can't sign a buyer's exclusive agreement with a specific agent. Of course you can, but you don't have to. And I never feel bad about talking to agents or wasting their time because I'm not. They aren't taking me out to showings. They're not driving out to meet me anywhere. All I'm doing, because again, I don't live there, is calling on a specific listing and then asking them some questions about it. That's it. Not really a big time killer. Now, here's the exception, and don't break this rule. As my buddy, the famous YouTube investor, Lumberjack Landlord says, dance with the one who brung you. If an agent brings you a deal, that is the agent you use for that deal. If you try to cut them out, go straight to the listing agent, bypass the guy who brought it to you, that's some shady stuff. Don't do it. Your reputation freaking matters, especially at a distance, and nobody gossips more than real estate agents. They're a bunch of drama queens. Now, let's say that you're having great success and you found a property that you like. You called the listing agent, they're going to represent you, write your offer up. But what does that mean? What does it mean to write your offer up? What is your offer? Here's an example. I'm offering list price with a 10-day inspection period, financing and appraisal contingencies, earnest money of $3,000, and that's due within 3 days of the mutual agreement. Oh, that's a freaking load. But congrats, the seller says that they accept. They'll send the purchasing contract to the title company and open up an escrow account. But what the heck does any of that mean? Let's break it down step by step. Okay, you've agreed to offer their list price. You want a home inspection completed, and you want 10 days to be able to get that scheduled and completed. Your deal is contingent upon financing. In other words, if you're unable to secure financing or the property doesn't appraise for the right amount or lending standards change, you can back out of the deal with no punishment to you. Punishment? Wait a minute, hold on. How can I get punished in this situation? Earnest money. All right, your earnest money is essentially the down payment of your down payment. It's due typically within 3 to 5 days of the mutual acceptance on the purchase agreement. And at closing, your earnest money is applied to the purchase price of the house. Now, this shows the seller that you have some skin in the game. You're a serious buyer. You have the intention of buying. And if you pull out of the deal or don't fulfill your obligation, you could lose that earnest money. Now, that earnest money is sent to an escrow account and opened up by the title company. All the title company is, it's just a group of lawyers who make sure that you and the seller fill out all the necessary paperwork and forms to legally transfer ownership of the property, and then they record that title info with the county. They maintain the escrow account, which holds all of the money until closing, where it gets dispersed and everybody gets paid. Now, the ability to lose this earnest money is why you asked for financing and inspection contingencies. This allows you to inspect the property and pull out without losing your earnest money. It allows you to pull out because you can't finance the deal. And again, you don't lose your earnest money. It protects you, but you do also have to fulfill your end of the obligation. Now, if you fail to schedule the inspection and get it done within those 10 days and you don't submit an extension request, that's on you. That's your and your real estate agent's fault. So it does also protect the seller. All right, so you schedule the inspection. It comes back with some questionable things on it. Now, truth be told, even the best properties should come back looking like they're dilapidated old junkers. I want the inspector to tear this property apart. Once you have it back, you got a few choices. You move forward with the deal. You cancel the deal and pull out. Or you ask for concessions. You can ask the owner to fix some of the issues, make some repairs. You can ask them to provide additional funds at closing, buy your rate down, give you extra money. All of those things are options. Now, what you're going to be able to negotiate is typically contingent on the market. Is it a seller's market or a buyer's market? Or is the seller desperate enough to play ball? Now, the last several years, most people got no money at closing, and buyers had to compete against each other. Now, that's not the case currently in all markets. A lot of buyers are currently getting the opportunity to demand more money and repairs. Now, while you're doing your formal inspection, I always have my property manager there at the same time to do an informal inspection. They represent me. They manage my properties, or I've informed them that I intend for them to manage my future properties if it's the first one. Now, I want their opinion on the property, if it's going to need repairs, what the neighborhood is like, and I want them to confirm, once again, what they think it will rent for. Now, if the property doesn't pass my property manager check, then I pull out of the deal and I find something else. Now, you don't want to abuse this and just have your property manager going out and looking at every single property 2 or 3 times a week for you, because they're going to quickly tire of that and probably start to say no. You should do as much of the legwork as you can, so I ask agents to provide me with pictures and videos of the listing. I want to make sure that I'm really serious about a property before I send my property manager out so that I don't waste their time.
Here's the house. Does seem like there is one that is right there, but right across the street is this right here, and it's all pretty open from here.
Now, for this example, we're going to say that you made no requests, the property manager loved it, they predicted it's going to rent for a sufficient amount, everything's looking good. What's next? Okay, the lender's still going to have to send out a third-party appraiser to protect them and verify that what the seller is asking for and what you're paying are actually what the property is worth. Now, personally, I think appraisers are a joke. Terrible at their job, and most likely they got picked on in school and now they have to make everybody else miserable like them. But my personal feelings aside, it's part of the process, and you have to hope that they don't show up and blow up your deal by saying that it's actually worth 25% less than the number you've agreed to. Now, for our little scenario, we're going to say that the appraisal came back and it appraised at the purchase price. Now, if it hadn't appraised high enough, you did list that as a contingency and you can pull out of the deal, no penalty to you if necessary. But again, everything's moving along swimmingly, and now the deal can go to underwriting. You're probably going to get pinged by your loan officer a few more times asking for some random financial documents that shouldn't matter. But the underwriter, like the appraiser, is kind of bored and they're just exercising the tiny amount of power that they have in the world, all right? Play nice with them, or they too can blow up your deal. Truthfully, odds are your loan officer probably did a great job at pre-qualifying you, but this is the last hurdle that you have before you're cleared to close. Now, once you're cleared to close, you can wire the money from your bank account to the title company. The title company will have provided you with the wiring instructions, and most likely it's the same process as when you sent the earnest money. The next, you either DocuSign or use a mobile notary to sign for the property. Now, there's a number of different forms that you need to sign. They're all going to be recorded with the county as ownership for that property transfers. Now, most lenders require notaries for their documentation. All of the cash transactions that I've conducted have all been fine to just use DocuSign. Now, I always ask my real estate agent to attend closing because, again, I'm not there. Now, the keys at that point are delivered at closing from the closers to the real estate agent, and then he or she delivers them to my property manager. Now, if you're taking over a property that currently has a tenant in it, you're going to get copies of the lease if you didn't get them during the inspection process, and you're going to get the tenant's security deposit and prorated amount of rent for the month that you took possession back to you as a check or some type of credit at closing. Now, once your property manager has the keys, they take possession of the property, they secure it, and they begin advertising and showing the place for rent or working with that existing tenant. And that's pretty much it. That's pretty much buying a property at a distance in a nutshell. Now, each of these steps that I covered can be talked about at great lengths and in much more detail, but this is the gist of getting yourself ready, qualified to buy, finding a deal, making the offer, pushing through the inspection and contingencies and financing, closing the deal, transferring possession from the seller to the property manager. Again, in a nutshell, that's pretty much how you do it right there. Now look, if you liked this video or you found it helpful, please leave a comment down below with which market that you're considering buying in. I'm always curious to see where you live and where you want to buy. Feel free to message me directly on Instagram at MillennialMike. I appreciate you guys always for watching. Like the video, sub to the channel, and we'll see you next time.